Puppy Trades! I wanted to do a video analysis update of the growth stocks. Small cap growth. But first, it is the weekend. I have not gotten that much sleep. And I am about to light a bowl of completely legal, I can't say it now, but one of the stocks that invest in this, Tilray, and a lot of these members of the sector made some waves recently. I don't know. I know what everyone's thinking. Oh, it's a pump and dump. Oh, come on now. Really? Tilray? Come on, Puppy Trades. You're not getting bullish over that scam BS headline we have every 5 minutes that marijuana is going to be federally legalized. But I am going to give you a homework assignment. I want you to do a YouTube search of Adam ruins everything. Adam ruins everything. Marijuana should do the trick. And you're going to listen to someone just give you some facts, some objective, cold, hard facts, not me, about why marijuana is legal. So that's my source for what I'm about to say. And I want to say it before this happens, just for the record. Because a lot of people, when abortion became illegal, they flipped, man. They jumped ship. I saw so many people who were against a woman's right to choose. They're for a woman's right to choose. And then once the Supreme Court was like, nope, we're not going to, we're taking back Roe, right? Both of those justices said, nope, we're not going to get in that Supreme Court and immediately take away Roe. They lied under oath to Congress. But a lot of people said that, I knew a lot of people who, just because that happened, they completely changed their political stance. Just because, people like Brett Kavanaugh and, whoever got in there, swore, Amy Coney Barrett, she swore under oath, I'm not going to repeal Roe. No way. I'm not going to use my, Catholic religious ignorance, to take away the right to choose that separates us from, countries where women don't have rights at all. They got to cover their faces. I love Big Brother. I mean, we're basically all that now. That's who we all were in 2021. But I saw a lot of people just flip as soon as they did that, just because Brett Kavanaugh and Amy Coney Barrett said so, and Mr. Exotic Vacations on the taxpayer dime, Clarence Thomas, people they didn't really agree with, but then all of a sudden, nah, man, it's the law now. It's the law. What if a woman gets raped? What if a woman gets raped? Shouldn't she have the right to choose not to have the baby of that rapist? No. Brett Kavanaugh said no. Fuck those fucking, victims of rape. All right. Okay, man. So it's scary to me how people can just change their opinions just because some people they don't even like, said some stuff. I don't agree with that. You can, have civil disobedience, civil resistance, and free speech in this country for now. Take advantage of it. But I'm not going to switch up on pot just because they changed the rules. So go look up Adam Ruins Everything and find out why this is really illegal. Besides the obvious fact, we sell more alcohol, we sell more opiates, we sell numerous ibuprofen, tons of anti-inflammatories, tons of allergy medicines, a lot of things, tons of mental health medications that, PTSD medication. Isn't that kind of sick? Biggest, most effective cure for PTSD nightmares for veterans so they can have a safe and stable life is this. What this company engages in. So this company, Tilray, and we keep that away from them, right? Those patriotic red states, right? Those patriotic red states that love the troops. Well, if you love the troops so much, then why are you taking away their access to medical pot when this is the number one cure for PTSD nightmares? You love the troops so much. Oh, you care about life so much, right? You care about life so much. I mean, forget the free market. Forget the free market. That's a joke. That's a joke. You want to compare this to nicotine and alcohol? You're crazy. I'm not here to go on some lecture, but people are going to switch up. So I want you to go look up why weed is illegal in the first place. Became illegal because it was actually legal during Prohibition. It was actually legal for most of this country's history completely. This country was actually founded by people who were stoned off their ass. You read the Constitution, you can see that. These people were paranoid. You can't search our places. We need firearms in case the government takes over. The whole Constitution, they're tweakers. We can say whatever we want, man. Like the first 10 amendments, are all just something that like high people would say, man. No, we need to be able to assemble. What do you think they were doing with that one, But yeah, this whole country, we never gave a damn about this. Obviously, nicotine companies and, alcohol companies and pharmaceuticals, right? All those, safe drugs, right? The usage goes down in all the states immediately when this is, legalized. But one of the big people in this Adam Ruins Everything video who made marijuana illegal was a nice guy named Richard Nixon. And Richard Nixon had this Department of Defense, Department of something. I don't know what it was. Go watch. That's what I'm saying. Go watch the video. Richard Nixon has a guy in his cabinet, and they're going to show you the quote. But they're the reason that marijuana is illegal is because they wanted to convince white men that marijuana made Mexican men horny and that was going to cause their white wives to be raped. That is the reason that Richard Nixon and that administration tried to justify making marijuana illegal. That's the real reason. And it's obviously affected the black community, the Hispanic community, the war on drugs, where we know the CIA sold crack cocaine to the black community. Then Reagan and the Clinton administration, right? So a Republican administration and a liberal administration, both with the help of President Joe Biden, starts the war on drugs to get everyone. And one of those big drugs was marijuana. And now, even to this day, predominantly, very oversaturatedly, and there's numerous statistics to support this, black and Hispanic people have been incarcerated and had their lives ruined over this. All right, I'm not switching up on that because some bullshitter is going to say something in the future. For this stock, Tilray, this could be a wave 1 and a wave 2. Very clean. 1, 2, 3, 4, 5 wave subdivision. An ABC correction. And we break this high. If you look at the RSI, you can see 1, 2, wave 3. Highest high. Shallow wave 4. And a wave 5 that ends with momentum divergence. We've broken that high. So the long-term invalidation is 2.22. A little far. And really, Tilray could very easily go ABC for wave 2 down here and then go up for wave 3 of wave 3. That's all a possibility. But this break to a new high does suggest to me the length of wave 1 placed at the wave 2 low is eventually going to be hit for a wave 3 target. That's 3.80. Realistically, though, Tilray, what bulls would look for if Tilray starts taking off is that it's going to go rally, and this daily RSI, I think would be the most useful, is going to go break this high of 76.26. That would suggest to an Elliott wave theorist that a wave 5 has not occurred. We could see a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, wave 5 is the length of wave 1 placed at the wave 4 low, could look something like this. So this is Tilray. I know it's a wide invalidation right now. Some of these growth stocks are wide. That's kind of my little intro for today. You know, I don't think it's right to just change up because the Supreme Court, you know, says some crap. By the way, in my last 2 videos, I talked about, you know, Saturn worship. You know, I don't want to get into the law, but those Supreme Court justices and their black robes, kind of like those black graduation robes where you got your black hat on them. And as far as Catholicism goes, basically every court proceeding is the sacrament of reconciliation, you know, just being played out. You know, Santos Bonacci has a lot of work on that. The fibs, this might be a little, you know, rough, but I was just trying to draw this out, what this could look like. This could be wave 1 and wave 2. A wave 3 target to 3.80 to 4.06 could be hit before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, wave 5 is the length of wave 1 placed at the wave 4 low. You know, Tilray could go up to 4.67. That would be substantial. IIPR is a different kind of way of the pot sector being played. This is actually a REIT, similar to AFC Gamma. Just looking at this from this low, for IIPR, there's a chance this is 1, 2, 3, 4, 5. So above this wave 2 low, I think that IIPR has started a wave 1 and a wave 2 from this low. That low is 74.81. In the big picture, that could open up a larger count, which is one place I wanted to go with Tilray, where this could be 1, 2, 3, 4, 5 waves up, an ABC correction at the 78.6% fib, a wave 3 of wave 3 to an all-time high. In the huge picture is what the upside risk could be defined. I really wanted to focus this video on growth, so I think the, you know, pot stocks, you know, take a, you know, a stab at that. The NASDAQ, I talked about recently from this low. This could be or from this high. This could be an ABC correction where the length of wave A placed at the wave B high was met for wave C. This is a wave 1 and a wave 2. And this is another wave 1 and another wave 2. We fit the bill for a large wave 3 of wave 3 that goes past the 161.8% extension of the length of wave 1 placed at the wave 2 low. That fits the bill for wave 3. We have a shallow wave 4. 348.71 is the most useful stop for now. 418 to 421 on SPY. I've been over recently why that was a useful level for its wave 4. I think SPY is a little closer to that. I think 418 would be a useful invalidation for SPY. 348.71, that 38.2% retracement would be the standard wave 4 stop. Wave 5 would be the length of wave 1 placed at the wave 4 low. That could take QQQ on a wave 5 up towards 408.71, even beyond that. I've talked about how should this happen, and we'll talk about some leading indicators it may, but I've talked about with SPY how should this happen, we see the indices thrust to an all-time high. We get, didn't want y'all to see that. This is a large wave 1 and an ABC wave 2. From this all-time high, the length of wave 1 placed at the wave 2 low. Ultimately, in the big picture, could take SPY on a rally to 600. Now, that's a much different time frame than the NASDAQ chart I just talked about. But that's my big picture view, where just from a long-term perspective, we're a little far from invalidating that. I actually did want to show something. I'll probably show it with the NASDAQ too, but let me just get the levels for SPY from Elliott Wave. 429.34. I'd say that's a little tight of a stop, but very useful for the global benchmark. This is 1, 2, 3, 4, 5 waves from this low. In the bigger picture, it's wave 1 and wave 2, and then I believe another wave 1 and another wave 2. This was wave 3 of wave 3. This is wave 4 of wave 3. If SPY does hold and QQQ holds that same 38.2% fib, the length of wave 1 placed at the wave 4 low could take SPY and the NASDAQ on a thrust to all-time high. For SPY, it's interesting, though, because this weekly RSI high of 70.70 has not been broken yet. Or it's pretty low. And if SPY does go and break that with a new all-time high, we see the weekly RSI up at 72, 73, and SPY is at all-time high with it. In Elliott Wave, there's a rule that wave 5 must end with momentum divergence. If wave 5 must end with momentum divergence and SPY makes a new all-time high on the weekly RSI and in price on the weekly chart, then that would break that rule. And what that could open up, and this is going to not sit well with a lot of people, and I don't blame them, is that this is another wave 1 and another wave 2 from this low. Now, that is very aggressive. From an Elliott Wave standpoint, it is a scenario that I have to prepare for. I've talked a lot about my downside risk management in the market, and since this is a tech and growth video, I'm just going to reiterate it. I have a substantial allocation to premium collecting and dividend paying holdings. That's one. Two is so I always have cash coming in to buy dips in the future for the rest of my life. That if I keep reinvesting, those bi-weekly cash positions are only going to keep growing in theory. The other way is that I have long gamma positions in these cases. That's where I have a long call and a long put. So the Metaverse ETF, METV, tracks very similar holdings to what we refer to as the classic kind of big tech, sexy growth. The Metaverse holdings can change, but it's tracking a lot of holdings that I think are quite correlated with Arkk, and they're quite correlated with the NASDAQ. I think even I had a macro axis said that the NASDAQ and the Metaverse ETF have about a 97% correlation. So I use options on METV, long gamma positions where a call and a put is bought. Just to be brief, I currently own the I always mix it up. For the mid-November expiration on METV, I currently own the 11 put and the 10 call. For the mid-February expiration, I own the 12 put and the 11 call, the 11 put and the 10 call, the 10 put and the 9 call. So those positions, and I have a few others, but that's kind of the primary thing I'm using right now, give me unlimited downside exposure to growth and tech. So that's how I am actually prepared for what a lot of your favorite, commentators on FinTwit are going to predict and are predicting and have predicted for a super long time, many years, but they're going to get back right to it. What they're going to predict, this is wave A, this is wave B. We're not going to see 459.44 be broken. The length of wave A placed at the wave B high is going to take the S&P down to a crash towards the low 300s, right? That's their prediction. I've gone through some, reasons. Most of them are examples of leading indicators. So I'm going to try to define what a leading indicator is right now. It's mostly important to Elliott wave theorists. I don't know many other forms of technical analysis that take leading indicators seriously because it's hard to really kind of quantify it the way Elliott wave theory can really quantify it. And Elliott wave theorist is measuring to the penny what the levels are, right? That's what a wave theorist is doing. It's a much more precise. So the possibility of a leading indicator being used by a wave theorist after being experienced could be a useful skill. An example of a leading indicator would be easiest just to go over some that I've gotten right. Right now I don't get them all right, but recently an example of a leading indicator would be that I really not have Nvidia up. Something weird happened to the Nvidia chart today. By the way, just for SPY, the final analysis, 429.34, tight stop, 420.04 to 418.31. Wide invalidation. The length of wave 1 places the wave 4 low can take the S&P on a thrust to 379.98. Should the RSI, the weekly RSI, go break 70.70, a more aggressive count could develop. That actually wasn't what I wanted to focus on in this video, but just real quick example of what a leading indicator looks like. They messed up my Nvidia chart. Something weird happened to this bar chart. I don't know if it's still going to be here, but today this Nvidia chart was messed up. It looks like they fixed it. It was weird. I didn't take a picture. I didn't want to scare anyone, but there was a weird glitch on the Nvidia chart. Anyway, an example of a leading indicator that has been successful, Nvidia has been two examples. The first, just for tech, is that in March and May of 2021, basically all tech from the March 2021 low formed a wave 1 and a wave 2. I have a pretty famous post that some people are really butthurt about because they keep unliking it every time I bring it up, but Nvidia, you see these two gaps right here, started to make a run at this wave 1 high. Every single tech stock, wave 1, wave 2, down to the date. NASDAQ, Apple, Microsoft, Facebook, all of them, you name them, it was that. S&P, 1, 2, but mostly tech. They all formed this wave 1 and wave 2. So what's every wave theorist saying? We're going to go... not every wave theorist, but every guru, you know what they said, right? They always say the same thing. We're going to crash, right? It's not going to broken, we're going to crash. And everyone always forgets they said that the numerous times it happens. But going back to story time, Nvidia forms a wave 1 and a wave 2. All the big tech stocks, every one of them is at the 61.8 to 78.6% retracement. Nvidia goes 1, 2, is the very first one to go break above this high. And I said, ding, especially when it started making these gaps. I was like, oh, ding, ding, ding. I think Nvidia's giving a hit. And then, boom. And all tech, massive, crazy rally. One of the more uncanny ones. One of the more uncanny ones. Another time, we all kind of just saw it. It wasn't as, the exact same, but all the tech stocks make this high in November 2021, Apple, Microsoft, and Nvidia all sell off together. They all put in highs in October 2022. Nvidia blows past it. I said, hey, let's take these Microsoft and Apple counts seriously. Oh, puppy trades, Microsoft. There's no way Microsoft and Apple can go back to an all-time high. I was like, it looks like Nvidia is giving a leading indicator. Not just Nvidia. I would say that there was a lot of people. I've got a few accounts that I follow: Alpha Charts, Pratty Charts, Ralph, Alfonso. They do base breakouts. All right, they do what's called base breakouts, and so they always are scanning for stocks making new all-time highs. But anyway, it was a lot more than that. I have a few more examples. Oracle was a pretty big example, I thought, especially for the software sector. It makes this high in December 2021. Oracle is a huge holding of, IGV, all these software ETFs, right? All these software ETFs. Oracle is a massive holding, right? So this is exact same kind of idea where Oracle is exploding, above the, late 2021 high. It's acting as a massive leading indicator, and there's been a few examples, and then, but Nvidia and, Oracle, what in the world did I just push? 10? Oh, 106.34. And this isn't the only one. These aren't the only one. There were numerous leading indicators of, at least what we've seen so far in tech, the NASDAQ getting basically all the way up here, right? It hasn't hit an all-time high yet, but there was a lot of money to be made, with that little bit of an edge, just like in 2021, May 2021, that, there were leaders running off above the wave one high after the 61.8 to 78.6% retracement, had been met. And so, I was kind of like, hey, this is kind of a big indicator, right? And even now, looking at Oracle, it looks like the count looks like this. This is a large wave one, right? And this was all crazy. All these counts were crazy. Oh, there's no way we formed a wave one and a wave two from the March 2020 low. I mean, that's basically what I've been saying for all these. It's either a wave one and a wave two from the 2020 low, Oracle and a few others, or, from the 2018 low, like Nvidia, and a few others. But this is an example of a leading indicator in Elliott Wave, when we have the exact same kind of dates, even of a wave one and a wave two at the 61.8% retracement. And I think the most mathematical way to put it is that they're objectively in the same sector, going up and forming these waves at the same dates, even, and they're in the top holdings of the same ETFs. That's kind of the big one, because that gets the kind of the physics involved, right? This ETF is leading this fund, especially the fund that's holding Oracle. Hard to bet against it, making a new all-time high. IGV, a classic example. What would another example be? Salesforce, I think, would be another example. So I think that, for a long time, and I can keep going over some, examples of leading indicators, but, this doesn't even look like Oracle's done. We looking at this RSI, large wave one and wave two at the 61.8% retracement, and then another wave one in wave two forms. Big wave three, past an all-time high. I would say, Oracle looks something like this. The length of wave one placed at the wave two low. Even Oracle within the short-term cycle, what are we saying? This is an ABC correction, and we're not going to break this wave three high, right? Just in the short-term cycle, what I've been saying with the NASDAQ, essentially, 1, 2, 3, 4, and then everyone's saying this is A, we're not going to break this wave three high. B, C, lower that we should be looking for. I can draw what that would look like. But even Oracle next week, even, if it's above 127.54, that's $1 away. That would be a pretty, just kind of already like, oh man. And then that wave five being the length of wave one, could take Oracle up to 140. And then what's in the big picture? Well, the big picture is an Elliott Wave. That might not even be it. because that would just end a large wave 3, for Oracle. There could be a shallow wave 4 and a wave 5 higher, right? Anyway, I didn't even plan on going on that big of a tangent, about Oracle. But it's a really good example of, a leading indicator. I think the ones that I've actually used are leading indicators. Caterpillar, I thought acted as a very reliable indicator. This is probably one of the clearest examples where this was the largest holding of XLI, and I basically came out verbatim, and I got a lot of stuff marked up on this. But basically, long story short, even now I think this could be a useful. I'm not going to get the fibs perfect for this, But what was this, right? This was the Dow Jones, right? All these Dow Jones components make this May 2021 high, and Caterpillar was the first one to break above it, right? And I don't believe the Dow Jones is broken above it yet, but XLI did, and XLI is a huge holding. So why is XLI being at an all-time high? Why is XLI being at an all-time high? XLI is the industrial ETF. Well, it's at an all-time high. So let's just look at this chart. But one example was that XLI was that Caterpillar, was kind of, now it wasn't just, when Caterpillar made a new all-time high, now it wasn't just Nvidia. Now it wasn't just Oracle and a few tech stocks, a few leaders. Now this was a huge holding of the S&P, huge holding of XLI. XLI, is a very important ETF. The XLI sector is about, I think at the time it was about 13%. Well, so why does that matter to a wave theorist, right? Why does that matter to an Elliott wave theorist? Because I say one of the worst things someone can do is just stare at the S&P 500, right? And especially for a wave theorist, right? Even with Nvidia at an all-time high. And I said Microsoft and Apple, those are going to follow. And the NASDAQ, that kind of looks like the NASDAQ's going to follow, and AMD, AMD's gone up, about 100%, from that November low. Anyway, XLI, this is a very liquid, important ETF. It's an extremely liquid and important ETF. I would say the wave count of this ETF matters, and let's just look at a few examples. I'll get Nvidia, XLI, and the same thing with Oracle. But let's just look at Nvidia, even Microsoft. What's the bear argument for QQQ? Well, the bear argument for QQQ from a wave theory standpoint is that we haven't broken this high yet. So it's so easy for the NASDAQ, right? A, B, C, right? We haven't broken this high yet. Well, the thing is, this count has been blown out of the water by Nvidia. It's been invalidated by Microsoft. It's been invalidated by Apple. It's been, there's numerous examples of this. For the S&P, it's been invalidated by XLI. It's been invalidated by, Caterpillar. It's probably been invalidated by a lot of holdings. I think even some financials have gone and broken up that, that kind of May 2021 high. And XLF is obviously a huge portion. But the whole point, from a wave theory standpoint, the argument is that we haven't broken this 2021 high yet. Right, all these dumb retail money bulls are looking for an all-time high, and that's some analysis, right? Well, so they're calling this wave B. From a wave theory standpoint, there's numerous examples from Oracle to probably a huge list. Nvidia, Microsoft and Apple. Well, they have broken an all-time high. They have broken this exact same 2021 high. So this ABC count has already been invalidated from a wave theory standpoint, right? This is all Elliott wave. None of this is stuff I can tell my broker. But if it's about technical analysis in the S&P, well, XLI, what's this count? 1, 2, 3, 4, 5 waves up, wave 1. And ABC wave 2, length wave 1, place of the wave 2 low. In the big picture, this was one where I said, this looks like we're going to have a new all-time high too. We did. But the equal X target is 142.91. It's almost mathematically impossible. That's a very dumb thing to say. Everything is possible in finance. It's almost mathematically possible in my, dumb retail money unprofessional opinion that XLI goes to 142 and SPY has had the super top. It's going to be crashing during that time. You know, maybe SPY going sideways and XLI dramatically outperforming. You know, but that's all example of a leading indicator where a wave theorist has to come out now and call every single one of these, they have to call this an expanded flat. An expanded flat is where the wave B makes a new high. I mean, but it's supposed to make a marginal new high. For Oracle and Nvidia, it's exploded past. You know, the higher you have a wave B for an expanded flat, just the goofier you look. Anyway, that's the whole problem. Post about XLI and, you know, leading indicators like that, you know, you get a lot more clicks and likes with 2008 analogs. And that's not me being bitter. That's just me like legitimately seeing, oh, okay, people are getting paid on X now. And they're getting 6,000. They wake up every morning and their paycheck is like, I can get 6,000 likes with the 2008 analog. You know, even just wave theory spot. Like realistically, like just think this through. I know it's so conspiratorial, but do you not think that like a lot of wave theorists know Microsoft and Apple and Nvidia are at an all-time high? But if you're a guru and you're selling a subscription, you're gonna ignore that. You're gonna ignore that. Every wave theorist who's worth their lunch money knows that if I'm calling for an ABC correction on the Qs, and my big argument, my whole thesis is that we haven't broken an all-time high yet, every single one of them knows Apple, Microsoft, and Nvidia are already at an all-time high. So if they're not showing their followers expanded flat counts, and they're just saying, hey, peekaboo, don't look at those, you know, puppy trades is evil. Like, he wants you to, you know, look at Nvidia. He wants you to look at, you know, Microsoft. No, good wave theorists just stare at the S&P 500 all day like they do in, you know, like they did here, right? This was another example. So many. Where we were above this high. We were above this October 2020 high. And I was like, guys, length of wave 1, place of the wave too low. We're going to be hit. Anyway. You made it through all that. I'm going to make you go through one more. I actually, you know, got ChatGPT, OpenAI, a lot of threats to investors and traders that robots are going to replace them. You know, CFAs, CMTs, they're worried that some of these AI programs are going to just replace them, you know? Should an AI robot be able to pass the bar? You know, should an AI CFA be able to take the Series 7? A lot of people are worried, you know, AI is going to replace jobs and stuff. It's interesting that there's literally, you know, some tickers that can protect against that. Interesting thing about the stock market, there's a way to manage basically every risk. You know, it's all insurance, but you look at the NASDAQ, this indicator from bar chart, it's called the Trend Seeker Indicator. And it is incredibly impressive if I can find it. But the Trend Seeker is a proprietary bar chart indicator that's free. The results on the NASDAQ weekly chart are very impressive. You know, maybe because it's a very trending kind of liquid instrument. But just some of these, hard green means go, right? Only green means go. You know, red means stop. You know, when it's like this, there's green and red. That's kind of like in between uncertainty, right? But when you go from like full green to uncertainty, that's kind of scary. When you go from full red to uncertainty, that's kind of, you know, scary for berries, right? But it's had some interesting results. Right now, it still has us in an uptrend. It says it uses wave theory and the volatility of the underlying metrics as well as time, to find, the trend. I think it's very impressive. I mean, this is a very impressive one. It goes full red. It was full red in 2016 for a year. And then midway through the year, it flips to full green. This proceeds to, about a 2.25 year rally. The 2008 low, there are these periods where, there's uncertainty, there's false signals. And, I think mostly it's doing pretty well. For SPY, in some of these, at the 2008 low, it was red for, a really long time on the weekly. And then this kind of helped find, the big low. Hey, in 2009, it ended the risk off signal May of 2009. I bet a lot of gurus would be bragging about that. It's in a risk on signal, late July 2016, leading to a very large rally. Risk on signal in, April 2019, catching all of that 2019 rally. Risk on signal in May of 2020, catching all of this rally. Risk off signal in January of 2022, catching all of this. Risk on signal in, March of 2023, catching all of this. So, pretty impressive. Right now it's got 343.87 is the stop. Anyway, I think I've covered the indices enough. Leading indicators, I've talked about Apple and Microsoft recently. What are they going to say for Apple? This is the wave 1 and wave. What I'm going to say is this is the wave 1 and wave 2. This is wave 3 and wave 4. The 61.8% retracement of 164.65 is a stop for a wave 4 to end. May have already ended. Pick the low is obviously 171.96. The wave 4 is already ended. Be a little interesting to see to see Oracle above this high. Maybe. Anyway, that was just a thought. Apple hasn't really been leading tech. That's been Google and Amazon recently. Darn, right? Tough market out there. That's called a stock picker's market when Apple, doesn't lead. But anyway, if we're above 164.65, I'm looking for a wave 4 to end, or have already ended, and a wave 5 higher. Length of wave 1 placed at the wave 4 low. Takes Apple up to 204.49. Talked about another video. If we get above, on the monthly. No, it doesn't work on the. Does it work on the monthly? And the monthly chart, this RSI right here, is at 66.29. I think really it's best to stick with the same time frame. So the daily RSI is 77.61. The rule is that if a wave 5 hasn't occurred within the same cycle from a low, then a wave 5 has not occurred. So I believe it's best for the price and the RSI to match. If I'm using the weekly RSI and the weekly price, I want it to match. There are some times where the weekly RSI, I'm waiting for something, and the monthly RSI has confirmed it. That's, just the deeper into Elliott wave is when the RSI starts getting used. I think it's best to be used kind of day one. But anyway, I didn't want to, confuse anyone. Above 164.65, it's very simple. This is wave 1 and wave 2. But the evidence for that is we went past the 161.8% extension of the length of wave 1, placed at the wave 2 low. We had a shallow wave 4 correction and a wave 5 higher. No, I'm looking for a wave 5 higher. What are the bears gonna say? Sorry. What are the bears gonna say for Apple? The bears are gonna say for Apple, this is wave A, this is wave B. We're not gonna break this high, and we're not even gonna break this high of 189.98. This is wave A, this is wave B. So they're looking for wave C lower. Now, that would still be a buyable ABC. It would even still be a place where a wave 4 could end. That's not my bias right now. I've given the stops and the levels for that. That's what they're going to say. And obviously, if that did happen, they're not going to say, oh, what this is an ABC, 1, 2, 1, 2, possibly 1, 2, 3, 4, even still possibly. There'd be a way to define the risk, but they're not going to say this is an ABC. They're going to say, you know what they're going to say. It's always the same thing, and that's why having long gamma positions like the Metaverse ETF that I have really helped me sleep at night. Apple's one of the bigger holdings. Very hard to believe most of the holdings are gonna, that are in that ETF are gonna outperform Apple if Apple crashes. Obviously, that's a big if. But anyway, I didn't mean to spend too much time on Apple. It's a good example of success after a leading indicator, where Nvidia had blown up to an all-time high, and this kind of whole Apple rally with the NASDAQ and Microsoft was heavily foreshadowed, just like it was back here, right? Just like it was back here. We forget the multi-year rallies in tech for the 1 week, 2 week corrections. I get it. You make more money that way, especially with X Blue. Got to be careful. Okay, so there's an ETF now called OARK. I just wanted to have these up because it's not just OARK. There's a lot of yield max ETFs, and they make investing in a lot of these growth stocks a lot more interesting, and they also even make it a lot safer. In my just objective, unprofessional opinion, I think that yield max ETFs help me really mitigate some of the downside risk, at least from a pair compared to when they didn't exist, right? None of these stocks pay any dividends at all, right? So if I'm wrong about them and they just go to splat, there's no dividend. That's the whole risk. The great, I don't think it was Kevin O'Leary. It might have been Kevin O'Leary. I don't want to say the great and then name someone from CNBC like a sheep or Shark Tank. But Kevin O'Leary, he said one of the things that really helped him was someone asked him, why would you buy something that doesn't pay a dividend? Well, he listed Yahoo.com. They always list Yahoo.com as the reason not to invest. Yeah, there's other horror stories. But Yahoo.com, right? Everyone, I guess there were some people in the tech crash. They were like, oh, I got to buy one tech stock. No, not Apple, not Microsoft, not Google, not Amazon, all in Yahoo.com. So he made up, not that he made up, but he said Yahoo.com was an example of it didn't pay a dividend at all. So the risk is that when investing in something that doesn't pay a dividend at all, is that there's no gains at all. They don't get any money back. They just lose everything, right? That significantly changes when a dividend's involved, regardless of, not regardless, but, if the dividend's coming from option premium, which for these stocks, that's actually a benefit. So Tesla, Apple, Nvidia, I own all four of these. I'm interested in some of these. They added new ones recently. AMZ, FBY for Meta, GOI for Google, interesting name. Netflix, Infly. They got Coney. I own Coney. This is one of the bigger positions I've been doing recently. One of the bigger positions I've been doing is Coney, and 65% Coney and 35% Coinbase. I'll go over Coinbase in this, but I run that same thing with Arkk and Tesla and Tesla and OARK. So anyway, they're helping completely pay for themselves. Not to mention that, the whole argument is, oh, what if they crash? That's what the metaverse ETFs are for. That's what also a lot of, I talk a lot about boring stuff. In this video, I've tried to talk about fun stuff. I'm just going to try to get to it, man. All right. We're just going to talk about fun now. Fun. I'll probably put something down here for the thumbnail. We're on the time codes. This is where the fun starts. What could be going on? An ABC correction ending for the Russell. 1, 2, 3, 4, 5 waves from this low. I'll, draw them out. 1, 2, 3, 4, 5 waves from this low. And then the Russell at the 50 to 61.8% retracement. 152.52 is a wide invalidation. For the Russell, I'll also add RYLD, RYLG, and RVT. Very interesting high dividend paying options I've considered and looked at. That track the Russell or aim to beat the Russell. In the case of RVT, in the case of RYLD and RYLG, selling options against the Russell. I've also been interested in how there's an ETF card called RWJ. It significantly kicks the Russell's bottom by filtering for what it thinks is the most profitable stocks. But anyway, what the Russell could be doing: 1, 2, 3, 4, 5 waves up, wave 1. Wave 5 ends with momentum divergence. Wave 2, wave C, the 50 to 61.8% retracement. The length of wave 1 placed at the wave 2 low above 152.52. Tighter is this low right here of 162.70. The Russell can go the length of wave 1 placed at the wave 2 low. That's way too high to even say out loud. But ultimately, the Russell holds a lot of energy. It holds a lot of financials, and it's gotten beaten down a little bit. It holds a lot of growth. It holds a lot of... That's not really what I was trying to get at. It holds a lot of small caps. It's the Russell 2000. You know, like Arkk, in those small caps, it's not looked good. Like the banks in those small caps, it's not looked good. I believe that the wave theory name for that not good phase is wave 2. This is wave 1. That was the good phase. This is wave 2 above 152.52 to 162.50. The Russell can begin another, what really in wave theory is called the great phase, you know, with Arkk, and a lot of the holdings in that, you know, are generally pretty exciting, to FinTwit, to various reasons. They're exciting to me, so I'll talk about Arkk right now. This is kind of that ETF. It holds sexy ones. And there's an ETF now called OARK selling option premium against it, that's yielding massively. I own it. It's the huge dividends help pay, for the underlying principal, but it also helps pay for future, investments and other things. The prospect of having, $2,000, $3,000 coming in every 2 weeks. An investor who's looking at that is playing a much different game, especially in fixed income land, where this is really the very volatile stuff. This is the very nasty stuff. This would be smaller holdings in a dividend investor's portfolio. But that type of cash flow, $2,000 a month, $3,000 a month, it opens up a whole new ballpark compared to someone who's all in the queues. They don't have any, dividends coming in. So if that can be achieved, that's one of the benefits, always having a future recurring cash position to, that this is a term I won't get into in this video, but to harvest the beta. And always knowing I'm going to have a future cash position, because realistically, there's some really low volatile holdings. I'll just give an example right now. HIGH from Simplify is holding about 65. Don't completely forget about that. It's holding an awful lot, like 99% short-term treasury bills, HIGH, and it's selling credit spreads to get a little bit of additional income. So right now we have this inverted yield curve. It has short-term treasuries. Its beta is like 0.32, 0.33, not very volatile at all. Its dividend yield is like 9.58. Last I checked. So that's another example of a dividend holding. That's got barely any beta at all. So that would be, from a beta standpoint, that'd be a larger, holding than, from a beta standpoint, that would be considered a much safer investment than the, 25% yield I would get from being in 50% Arkk and 50% OARK. So anyway, I'm going to take a little break. In the big picture, speaking of leading indicators, since we're getting into Arkk, we're just going to be done with value. Value, if I've talked about you, you're done in this video. Next video for you. No more value in this video. You guys have listened to my religious beliefs. You've listened to gematria. And really, that was all about stock. But the fact that people can't see how that's about stocks is sad to me. Your dollar bill says, "In God we trust" on it. All right. Your timekeeping system is named after Saturn, Kronos, the Roman time god of enslaving humans. Large wave 1 and wave 2 for Oracle, Microsoft, Apple. Doesn't guarantee anything. Nvidia could be a big leading indicator for other semiconductors. In the case of Nvidia, for Oracle and Microsoft, software. A very obscure holding that looks awful, awful, awful like, and this isn't the only example, some of these Kathy Wood, sexy growth stocks I've done the walk of shame about. And remember what I talked about, what's the definition of a leading indicator? Very similar sector, very similar dates, forming a wave 1 and a wave 2. We'll talk about what this stock is, but you probably guess what type of sector it is in based on this. Big high in August 2021, big low in June 2022. Very much reminds me of a chart of Okta, which I got wrong. This low is broken. And PayPal, which I got wrong, this low is broken. It also reminds me of ROKU, which I got, PayPal and ROKU, I got very, very, very right, extremely right. Then this stop, got broken. This was in August of 2021 for this stock. For this low, and you can almost even tell, July 2022. Anyway, this stock is called Veritiv Holdings. I saw it on the strangle screen. That's why I was looking at it. Veritiv Holdings provides digital infrastructure and continuity solutions. It offers hardware, software, analytics, and ongoing services. Veritiv Holdings, formerly known as GS Acquisition Holdings, is headquartered in Columbus. So it's a high beta software stock making the same dates, same highs, as Okta and PayPal. Very similar. And this kind of whole sector that's getting a lot of laughs, the bull argument is that some crazy stuff is going to happen. And Nvidia, that connection's gone away, right? It's Nvidia. Oracle, right? Come on, it's Oracle. I get it. Microsoft and Apple, don't even need to explain those. Veritiv, we're in a little bit of a interesting, this is kind of one of those ones where, it looks like a Kathy Wood stock, right? It looks like Arkk, big holding, makes this big top in the summer of 2020, breaks this low and splat, right? Makes this low a little later. Okta is the exact same dates. A lot of software is the exact, PayPal is the exact same dates. A lot of software is the exact same dates. If it's not this high, it's this high. ROKU, it's this high. PayPal, it's this high. Okta, it's like this high. But all of them go down, just like, Veritiv. And we've seen it go on this crazy rally. And it's not just that. I'm going to go over a list of evidence. For Arkk, and it's actually pretty useful to find risk. And there's a lot of Arkk ETFs. I thought the Arkk Robotics ETF also gives an interesting view. But right now, what could be happening for Arkk, this is wave 1 and wave 2. This is another wave 1 and another wave 2 at the 61.8 to 78.6% fib. 34.72 is the invalidation that this is a wave 1 and wave 2. If Ark's above that level, a wave 3 of wave 3 can occur. This would be 1, 2, 3, 4, 5 waves. The daily RSI breaking 65.14 wouldn't be, the craziest burden. For ROKU, it's not. They say correlation analysis killed the cat, but this is, we got an interesting little headline from ROKU. They'll say it's a trap. I think from this low, ROKU does something very interesting because it's one of the largest holdings of Arkk, and it forms a very clear 1, 2. I don't think this is wave 3, wave 4, and wave 5. But what I'm saying is that this is at least 1, 2, 3, 4, 5 waves. I think what it really is wave 1, wave 2. And that's where it gets kind of crazy, right? I can't even say that. It gets kind of nesty, where a bunch of small wave 1s and wave 2s form. It would be especially interesting on this weekly chart if ROKU went wave 1, wave 2, because really if Roku makes another high, there's that's clearly 5 waves. I know it. This is one of the biggest Arkk holdings. I think that this isn't necessarily a leading indicator, but I'm just looking at the evidence. If I'm a wave theorist only, I think this is 1, 2, 3, 4, 5 waves. Arkk is defining the risk more accurately than Roku, but this is just stuff that I look at. We have a lot of leading indicators for tech and software, and now there's even getting stuff where some of these trashier names are starting to even be successful. I started the video with the pot stocks, but it's kind of thematic. I think the Russell 2000 and Arkk are really going to be the best definitions of risk. I gave those levels with IWM a lot. Arkk, stupidly tight and really not that useful, would be 78.27. I think the really important invalidation is 34.72. This is wave 1 and wave 2. That's another wave 1 and another wave 2. We can see Arkk form wave 3 of wave 3. Tesla in the evidence sector. I didn't want to get, I meant to talk about Tesla with the clean energy, the few clean energy stocks I'm going to talk about in this video. I'm going to mostly stick to kind of sexy Cathie Wood software stocks. I do have a little bit of merit with Tesla, not just with multiple, wildly uncanny predictions, but even just recently, I said that's wave 1, that's wave 2. I'm looking for a big wave 3 to develop where we break the wave 1 high on the RSI. I said from this low, this was 1, 2, 3, 4, 5 waves. We had a wave 5 that ended with Momo, an ABC correction where the length of wave A placed the wave B high was where wave C ended. So I said wave 1, wave 2, Tesla's going to go to the equal X target, hit it. I even said I'm looking for it to break a new high on the RSI to form, to give evidence that a wave 5 has not occurred. What I think for Tesla has happened. This is wave 1 and wave 2. This is another wave 1 and another wave 2. I like the 61.8% retracement of 208.49 for this to be 1, 2, 1, 2. Wave 3 of wave 3 before a shallow wave 4 and a wave 5 higher. If Tesla breaks this weekly RSI, should that happen, if Tesla breaks this weekly RSI of 70.19, then that's going to confirm this. And why that matters is let's say Tesla broke this weekly high in price, but it was still below this weekly high on the RSI. What the bears would say is that this is 1, 2, 3, 4, 5 waves up, and then they're going to look for a correction. The reason that's silly is because they would still be saying this is a wave 1, and they're looking for a wave 2 correction, which is a very viable correction. They're not going to mention that, obviously. But they could still technically say that from a wave theory standpoint if Tesla broke a new high in price, made a lower low on the weekly RSI. So anyway, Tesla breaking this high in price. In the future, I'm also going to be very focused on this RSI. This will break 70.19 on the weekly RSI to confirm this is a nest from this low. Let's get into some round robin. AMD, I talked about it a lot in my last video, but in the world of leading indicators, an ABC correction, just like, Nvidia, exact same dates, exact same low even. From this low, this is 1, 2, 3, 4, 5 waves up for wave 1, an ABC correction for wave 2, another wave 1, and another wave 2 at the 61.8% retracement. I like 92.11, that's 78.6% fib for AMD to enter wave 3 of wave 3 before a shallow wave 4 and a wave 5 higher. I think some of the evidence comes from this RSI. 1, 2, 3, 4, 5 waves up. If this was 5 waves up, AMD should have ended it with momentum divergence. It didn't. It broke to a new high on the weekly RSI. I think that's a hint. This is wave 1 and wave 2. I'll give a little bit of options data. Notice that when it's in the 61.8 to 78.6% zone, lots of straddle and strangle appearances. It's at 0% IV percentile right now, right? And it hit its IV low the first day of September. Something I certainly noticed. Snowflake. You know, I have to be honest. I do wonder. Oh my god! You guys are gonna think I'm not. I'm not even gonna say that. There's a snowflake sector. There's a snowflake sector. Budweiser, Disney, Shopify. There's like a political sector. I don't think Snowflake is one of them. Disney, Target, Budweiser, and Shopify. I've just got them. I think there's like a Snowflake political sector. There's like a boycott the lib sector. I swear. Disney, Budweiser, Target. I'm just going to say it. Disney, Budweiser, Target, and I think I named another one. There's like a boycott the libs sector. I swear. I'm crazy though. I'm nuts. Anyway, that's why I think that Snowflake. I'm gonna say I'm seeing so nuts for this. I think Snowflake's name, man. Every time I look at it, I just want to look at Disney, Target, and Budweiser. All right, so they say wave theory makes you crazy. All right, fuck. All right, that one, you guys can use that one against me. Anyway, Snowflake has been on the strangle screener. Let's get to less esoteric things. Snowflake's been on the strangle screener. That Budweiser chart looks good, man. Ugh. Budweiser, Target, Disney. I swear, man, the Snowflake sector is about to explode. Oh my god. Are the libs gonna come back? The real libs. Oh boy. This is an ABC correction in the big picture, possibly for Snowflake, an IPO base, right? Palantir, right? IPO base, very similar idea, not the exact same dates. There's a lot of these kind of where, Rivian, IPO base, possibly. Snowflake, it's pretty clean. A, B, exactly where the length of wave C is hit. For Snowflake, I've got a few things. I actually wanted to do this naked. So in the big picture for Snowflake, just looking at this, I wanted to do this one live. So you guys got to see me think crazy esoteric things about it. I don't do that for all of them. I promise. The weirdest complaint I get is that someone says they can't all be 1-2-1-2 Ellie wave nest. So it's important to know that catching a nest in wave theory is the big goal, right? That's the most profitable setup, right? So I'm looking for the best nest setups, and I'm using option screens to find them. Anyway, Snowflake, good example of that. From this low, gorgeous. Not this. I don't want to say. I think it's kind of pretty actually. 2. Could there really be a woke sector? You know how there was a meme sector? Okay. I know I'm gonna sound nuts, guys. I just gotta say it. There wasn't a meme sector before there was a meme sector. I look at Shopify, Disney, Budweiser, and Target, and I think one of the big reasons they're down is because of politics and being, Shopify's. No, sorry, I meant Spotify. Sorry, I didn't mean Shopify. I meant Spotify this whole time. Spotify is actually, they did something Republican, but Disney, Target, and Budweiser specifically. I look at those stocks, and I think each of them has a long-term setup opportunity. And I can't help but think they're all technically down, for these political things. And I'm just are they a sector? Anyway, that's so nuts. If I could delete things out of this video, I probably would. I think this is a wave 1 and a wave 2. For Snowflake, 205.66. I'll tell you what, the benefit, you guys are definitely getting time codes now. Y'all are definitely getting time codes now. This is all going to be in the Snowflake time code. I don't delete tweets. Y'all are getting this. You know, I've been called crazy before. I don't correct people. I encourage them. Oh, yeah? I think this is a wave 1 and a wave 2. And in the big picture, I'm expecting Snowflake to make a wave 3 to a new all-time high, at least. Now, realistically, Snowflake's a high beta growth stock. I've seen a lot of options juice. What could happen, yes, I am focusing on the nest. What could happen to Snowflake is something like this, where it's formed a wave 1. I'll, subdivide this a little better. From this low, I think this could get pretty explosive, and I think the risk is pretty definable. I think this is 1, 2, 3, 4, 5 waves up for wave 1, large wave 1, and ABC correction wave 2. I think this is another wave 1 and another wave 2, and yes, I think this is another wave 1 and another wave 2. So Snowflake could get explosive. It's been on the strangle screener. That's not the magic screener, but that means institutions are betting on a pretty big move, in my opinion. And the pick the low is 142.40 at this level. That's the most useful level. The widest invalidation for a long-term crazy nest is 128.56. That's a little far. From a beta standpoint, Snowflake's beta is 0.78. So for very the more beta's been, the more history. What would be a better measure of implied? Because beta is usually more of a measure of correlation to SPY. What would be a better measure of how risky Snowflake is? You guys can see I was looking at crude oil before this. I told you guys, I'm freaking out right now. Crude oil scares me. I have nightmares about crude oil every night. Like, I wake up in the middle of the night, I'm like, natural gas! Snowflake is 0% IV ranking percentile. You gotta be kidding me. They're sluts! But even so, the implied volatility, even at the 52-week low, is twice as high as the S&Ps. So it's, at least it's almost 2.5 times higher than the S&Ps. Anyway, Snowflake gave the levels. Another example, Coinbase. I've talked about this a lot. Good example of how I'm blending an underlying ETF like Tesla, like with Arkk, with its underlying covered call selling fund. Also very similar to what I do with Clip and KWeb. What I'm interested in doing with RYLD is the covered call holding, and RWJ as the the holding that's not covered. But anyway, this is an ABC correction, I believe, for Coinbase. I've invested about 35% Coinbase, 65% Coney. I think this is wave 1 and ABC wave 2. Yes, I think this is another wave 1 and another wave 2 at the 61.8% retracement. I think this is, pick the low is kind of silly for Coinbase. That's 72.10. That's very tight. I'm going to keep holding it. I'm going to keep averaging in if Coinbase keeps going down. Especially with Coney, I'm going to keep averaging into this position. That's what I'm going to do. This is a Arkk holding, I believe. That's also why the big focus is on Coney. If Coinbase did fall, I could have a cash position, and Coney would be a big buy. Okay, anyway. I think this is pretty nesty. Wave 1, wave 2, another wave 1, another wave 2. The length of wave 1, place of the wave 2 low. I'm looking for wild stuff to happen. That's why I bought this stock. All right, that's clear as I can go. Yeah, that's also obviously why I'm, not just this. I think there's evidence, a lot of places. I mean, in the big picture, elephant in the room, just to be honest, Mara's got multiple time frames. This is a scary one. I don't know who it's scary for yet, but this is what could happen tomorrow. In the big picture, this is the crazy, thing that could happen. 1, 2. Look at that RSI. 1, 2. Wave 3 makes the highest high. We have a shallow, well, not necessarily shallow, but to the 50% fib. Shallow wave 4. Wave 5 that ends with momentum divergence. Mara has a lot of upside risk. Has a lot of interest in that upside and downside risk, technically, from the options market. I think this, I'll go over Ethereum too. But I think this is 1, 2. So I think Mara, for this, the daily count's most important. 1, 2. And let's look at this RSI with it. 1, 2. Sorry, let's look at this. What the bull view would be. What's another option for Elliott Wave? Sorry. Let me just refresh a little bit. Hey, what can I say? Pat McAfee sold out to ESPN. It's my time to, actually speak my mind. Do whatever I want now. It's about to be legal. All 50 states. It's legal in the state I'm in. I look at a lot of these people on FinTwit with blue check marks getting paid to post, man. Getting paid to post about stocks from FinTwit X directly. You think that doesn't incentivize people to post crash porn? You think that doesn't incentivize people to, I guess do a lot of crazy things, man. I'm not saying any entrepreneur is bad, but I studied economics. One of my favorite books, I'm actually looking at it right now. It's called Economics, Values, and Organization. It's by Ben Avner and Louis Putterman. Very high-level economics book. It's about 500 pages. I've read the whole thing. It talks about, among many things, the importance of aligning incentives. We have all these people on FinTwit X, getting paid money per post. And when I look at how much some of these people are getting paid, I'm thinking like, man, like 6,000 likes on a post? Damn. Woo! Wonder what that X check looks like. People are going to get paid more money for posting on X than they statistically would from stocks. They're going to get incentivized to post clickbait, crash porn. You know what I mean? And people who don't study business think that's conspiratorial. That's why it's dangerous. People thought it was conspiratorial that they were saying we had to take boosters every 3-4 months to help Pfizer's profit. That's not conspiratorial. That's like shareholder law. Pfizer has to maximize shareholder revenue, right? They're a corporation. If a company's telling you need to take their product more often, that is, and they're publicly traded. They're and the CEO is saying that. Get out of here, man. That's just basic business, right? No, that's conspiratorial. We'll see. I don't know. There's only a few people I trust with that blue check mark, man. You're talking about stocks and you're getting paid to post. You're getting 6,000 likes to post. And you're posting a bunch of crash porn. It's different this time. Recession. Oh, I don't know, man. You're making a lot of money. I'm not seeing many stop losses. I'm not seeing many, long gamma positions. I'm not seeing many option selling, option premium collecting positions. I'm not seeing any short positions even. I don't know, man. But I'm seeing you're getting a big X paycheck. That's conspiratorial though, right? I think this is a 1-2, 1-2. We make a new high in price and times. What would the other view be for Mara? This is a 1-2, 3-4, 5 waves impulse. Why is that a little odd to say for a wave theorist? The reason that's a little odd to say for a wave theorist is that with the sole exception of the commodities market, that's a real rule. I didn't make that up. Wave 3 is, well, there's 2 exceptions. The other exception is that this is a leading diagonal. The reason that's probably not a leading diagonal is because you should normally get a nice rising wedge to form if you think it's a leading diagonal. I mean, I've seen uglier leading diagonals than this. But generally speaking, an Elliott wave, wave 3 is the biggest wave of the 5 wave sequence, right? In this case, if someone's calling this wave 3, they're breaking this rule for 2 reasons. I'll get it right. Yeah. They're breaking this rule for 2 reasons. Wave 3 is bigger than wave 1 in price, and it makes a new high on the RSI. The daily price and daily RSI, so it's the same cycle. There's a new high in price and a new high on the RSI. And this wave, what would be called wave 5, is by far the biggest wave. None of those support that this is a wave 5. Above 8.47, there's the possibility this is a 1-2, 1-2, yes, 1-2 L8 wave nest. Mara goes up into wave 3 of wave 3. Mara hit 0% IV implied volatility low for the past 52 weeks on September 1st. Had an awful lot of interest on the straddle and strangle screen during that time. They're buying long gamma positions. There's a few reasons they could be doing it. One is to have downside delta to buy against in a future dip. The only thing I could think of that a bear would say would be, this is wave A, this is wave B, they're looking for wave C, dumpster. So I will talk about Ethereum. I'll talk about other things besides Mara. But I think Mara above 8.47, is very explosive. And I think even the options market is, giving a little bit of hint. That Bitcoin has been very frustrating, which is, that's not a surprise. But if you look at Bitcoin, it's had absurd volatility where I can't even believe this. Bitcoin for about 3 weeks has been this close to an extremely tight invalidation of 24,815.78. For Bitcoin, that's like spinning. And it stayed there, hovering $400, $500 above that. It's wild. That's why I thought Mara and Riot and Coinbase were, really important. In Ethereum even were important, but Bitcoin hasn't broken below that. If it doesn't, the implication is very explosive. That's quite clear. What if it didn't and it broke below that? Would it be time to get super, super, super bearish? Bitcoin, in my unprofessional opinion, no. Bitcoin is also the argument could be made, this is a pretty clear 5-wave sequence. 1, 2, 3, 4, 5. if Bitcoin did break below that low, the next wave theorist level that they'd look for to buy a dip, I own BITO. I'd be looking at Maxi, MAXI, selling credit spreads and holding Bitcoin futures, paying about 10 or 11% dividend. So there is a way to collect premium from Bitcoin. The bear porn. I forget sometimes how much I censor myself. The bear porn chart right now. This is A, B, C from a 1, 2, 3, 4, 5 waves advance. Obviously, if Bitcoin got down to 22 to 19.4K, they say, hey, it's wave 2, load the boat. That's where that would go. That's why I think Mara and Riot above those wave 1 invalidations. And also, I'll talk about Ethereum too. Ethereum, I talked about in my last video. Since things are getting tight, Ethereum's got, just to be frank, the most useful levels. Obviously, at any time, Bitcoin can, cascade or implode, regardless of what someone on Twitter said about it or YouTube. But I think this is 1, 2, 3, 4, 5 waves up. 1, 2, wave 3, highest high on the RSI, shallow wave 4, wave 5 that ends with a momentum divergence. That's the monthly RSI. That's a very clear 1, 2, 3, 4, 5 waves impulse, an ABC correction at the 78.6% retracement where the length of wave A places the wave B high. It's where wave C ends. Very pretty. Very pretty. From this low, wave 1, wave 2, and then possibly from this low. 1, 2, 3, 4, 5. 1. I could do it on the RSI. 1, 2, 3 makes the highest high on the RSI. Shallow wave 4, wave 5 that ends with momentum divergence. All very esoteric voodoo crap. If Ethereum goes below 1,417.163. Above that, it could be a very explosive wave 1 and wave 2. Wave 3 of wave 3 in the short term. The widest invalidation for the bigger picture count is 1,077, which is quite wide from the current level. That's a longer term chart. I want to talk about some of these clean energy stocks. I talked about Tesla a lot. Enphase Energy, I've talked about a lot, and it's gotten extremely close to a wave 1 invalidation. So I'm going to, with Tesla, personally, I invest and own Enphase Energy. I think correlation analysis is pretty good for this sector. This is kind of one of the big leaders. It's one of the biggest holdings of a lot of the clean energy ETFs. Speaking of green energy, they did say there was a connection between the virus and all the clean energy stocks going up. That big thrust they had. That's an official fact checker statement. Talked about Pfizer and BNTX my last video. Enphase Energy. I think this is a wave 1 and a wave 2. 1, 2. Look at the RSI. Wave 3. Higher high in the RSI. Shallow wave 4 and a wave 5 that ended with momentum divergence. I think this is 1, 2, 1, 2. The invalidation is 1.1340. The wider invalidation is 108.88. Not far away. Not far away. I'll keep holding, and I had to manage risk with position size and a lot of covered call premium coming in for growth. If growth wants to keep crashing and clean energy wants to keep crashing, I don't think it will. The chart of Next Era Energy, not necessarily high, probably more highly correlated with utilities. UTG paying about 8.3 something percent. Very interesting ETF monthly. They actually pay out a lot of their gains as capital gains instead of monthly income, which is interesting. It's very interesting from tax perspectives. Anyway, that's the utilities ETF. I actually think that directly owns this. So next area energy pays a dividend. It's much more closely associated with the utility sector, but is also very closely associated with the clean energy sector. The sector has been beaten down for a long time, since early 2021, late 2021 for next area energy. But what could be happening, and this is 1-2, look at this RSI, highest high in the cycle, wave 3, shallow wave 4, wave 5 that ends with momentum divergence. Now an A, B, C correction for next area energy. So a lot of people have forgotten about this. Long time has gone by. A, B, C correction. We're right at the 161.8% retracement. So a wave theorist can actually be super precise, get the extension, hold and drag, release, click. All right, and then I'm going to move this out, and I'll make sure I got my exact dates. Prices 93.73. The price is the time, says Gann. $67.22. So I don't know why I'm telling you all this. 90.56. 91.35. That's why I tell y'all. Okay. There we go. Okay. So, what's the argument for NEE? Getting pretty damn close to the 100% extension. Could be a very dangerous place to short NEE. Because this is 1, 2, 3, 4, 5 waves up. ABC correction. And I bet most people in finance wouldn't say next area energy is blowing up, go all in short Enphase. That's basically the skinny of that argument. Roblox, I actually got Roblox pretty good. So what I said, 1, 2, 3, 4, 5 waves. Now let's get a little cheeky here. 1, 2, wave 3, highest high on the RSI. Shallow wave 4 and wave 5 that ends with Momo. A, B, C correction. Bang. Bang. Right where the length of wave A, place of the wave B high, is where wave C ends at the 78.6% retracement. Bang. We get a nice reaction from this low. Above 25.32. Got pretty damn close, but yes, this is another wave 1 and another wave 2. They're making them tight. You didn't think they'd make the next generational growth stock easy. Now that you called yourself a technical analyst. Monster Energy, 3. Monster Beverage, 3. 80% drawdowns in the early years. Could most people on Finchwood be called a retail bag holder with an 80% drawdown 3 times? Now, that's dead money, and there's more to the story than that. I'll give the Bears credit. But that ended up being one of the best growth investments. Google, all the big tech stocks, right? All the big tech stocks, that super long, bag holder, that still gets brought up to this day, 2001, 2008, right? They don't make them easy. Netflix, famous, it's like buying Netflix in 2011. Bitcoin never has made a lower low on its yearly chart. People still bring up every single crash. Bitcoin has had numerous crashes. Nvidia, numerous crashes. Growth, that's why I think, I credit the EPS growth There's actually some fundamental screens I've been looking at. Gotta know wave theory for growth. Gotta know wave theory for growth. You don't have a chance. No chance. Even the best ones are going to have dumpster corrections, and that fundamental story is going to change. For Roblox, above 25.32, that's tight for the high beta. Wide invalidation is 21.65. It goes to Valhalla. All right. I think that's it. Palantir, right? Beach coin and Palantir. Analysis from Poopy Trades. Those are real things I've heard. I'm glad you think I'm nuts if you heard that. This is an A, B, C correction. We didn't even hit the length of wave A, placed the wave B high. Damn. All right. Palantir analysis. I thought this chart was prettier than I thought. This is a wave 1 and an ABC wave 2. I think with the software theme I started this video with, I meant to have Palantir above this. What I've actually been looking at for Palantir is this. Yeah, this is what I was looking at. Okay. So, with Palantir, I know it's a little... This is not the prettiest chart I've ever put on a popular growth stock in a video. That might be why it works. I think this is a wave 1 and a wave 2. And this is a wave 3 that makes the highest high on the RSI. We have a shallow wave 4 and a wave 5 higher. So that's the more bearish argument. So let's just go over some schematics for Palantir. What would a bear argument be that would actually be, and I think there's been a lot of other charts I've gone over in this video, but obviously Palantir has its own fundamental situations. This looks like a pretty clear 1, 2, 3, 4, 5 waves impulse. So, as far as the RSI rules go, there's not this extra hint that wave 5 didn't end with momentum divergence on the daily chart or the weekly chart. But on the monthly chart, that is the highest high. And what I said in this video earlier, it's usually best to not mix the monthly RSI with the weekly price action and the daily price action. Some wave theorists want to jump the gun, so I just want to go over all the evidence for Palantir. This is a wave 1, very similar to perhaps Snowflake in this video, Datadog I posted about recently. I'll probably go over it in this video. A, B, C correction. And then from this low, what's going on? From this low, it looks like what's the argument? This is pretty clearly 1, 2, big wave 3 with the highest high on the RSI, shallow wave 4, and a wave 5 higher. What's the possibility though? So what's the bear argument there? Well, the bear argument is that that's a pretty clean ABC correction. Well, no, sorry. The bear argument is that that's a pretty clear 1, 2, 3, 4, 5 waves impulse on the daily chart, perfectly satisfying the RSI rule. And on the weekly chart, it also perfectly satisfies the RSI rule, where it can be seen 1, 2, 3, 4, 5. They make these difficult. This is the type of analysis. 1, 2, 3, 4, 5 waves up, ending with momentum divergence. But on the monthly chart, this is the highest high on the monthly RSI. And even if we look at the monthly RSI, we see kind of the subdivision. This is the low. 1, 2, 3, 4. It kind of breaks that wave 5 rule. I think that there's a lot of things to say about Palantir. The first is that even if the bears are right, they're going to forget that they're actually making a bullish argument in the future. That's 5 waves up. This is 3 waves back. Wave 1, wave 2, wave 3. If Palantir did go A, B, C, that equal leg spine op is 10. Okay? But what's Palantir done that's a little interesting. First off, the bigger message is the Palantir at 10 is a large wave 1, wave 2 super setup. What could be happening, though, that's interesting to me on the daily chart is this. From this low, zooming in, so I've gone dissected every time frame here. Zooming in, what could be happening is that Palantir didn't break 13.56. Above that, this is a possible count for Palantir. Now, I'm going to really have to move this chart over. This, and really, those numbers are too big, so I'm just going to delete them. But what could be happening is that starting from this low, Palantir didn't break 13.56. What could have happened is that it formed a 1, 2, 3, 4, 5 waves impulse, ended wave 2, and since, and so this is 1, 2, 3, 4, 5 waves up for wave 1. I'm going to make this black. And then it ended wave 2. And since it didn't break that low, what could be happening is that we're not getting A, B, C to 10. Bulls are going to see wave 1, wave 2, wave 3. I posted about Datadog recently. I've posted about some other software stocks. What could happen to Palantir in the daily short term is that it doesn't go A, B, C correction. It goes 1, 2, 3, 4, 5 waves up, holds above 13.56, goes 1, wave 2, wave 3 to 20.38, and even higher than that. Bulls are going to look for the daily RSI to break above 30.36 to 30.28. And with a lot of other, I think really for Palantir, if there were to be correlation analysis, Arkk, is probably the most, clear one. Wave 1 and wave 2, 13.72 is wide, 38.27 is very tight. Wave 1, wave 2, wave 1, wave 2, wave 3 of wave 3 can occur before a shallow wave 4. And a wave 5 higher, that would also kind of fit in line with the bigger degree picture count. That would be more aggressive, should Palantir not break, that small degree low, which I said many times, but will reiterate. Is 13.56. So what's kind of the big deal with Palantir? Well, if this is wave 1 and wave 2, the 161.8% extension isn't actually going to be 20.23. This is 20.24. This is 13.56. So the 161.8% extension above that is 24.32. So I'll probably be quick about Draftkings, Penn, and Caesars. But Draftkings is actually given a little bit of interesting information. What this could be in the big picture. This is wave 1 and ABC wave 2. For the sake of time, 1, 2, 3, 4, 5 waves up would be the subdivision. ABC correction. And then from this low, Draftkings forms a pretty clear, we'll get into what that is, but I think this is an ABC correction that ended a large degree wave 2. Why does that matter? Well, because if that's all correct in big picture land, there's a wave 3 to all-time highs, and even Draftkings being one of those bigger deal stocks. And we've actually seen evidence for that from this low. 1, 2, 3, 4, 5. Large wave 1 was predicted. An ABC correction to the 78.6% fib. Very similar setup to what I've talked about in a lot of stocks in this video. Above the wave 1 low was the invalidation. Wave 1, wave 2, wave 3 target was hit. The 161.8% extension was hit. There's a few things that could be going on. I think the biggest kind of takeaway, though, is that Draftkings has given a lot of evidence. One possibility, I think the most accurate count, is that this is 1, 2, wave 3, wave 4, a wave 5 could develop. This would be wave 4 already in place, above 25.41, and wave 5 would develop to 37.18. But I think that's a lot of evidence. 1, 2, wave 3 that goes way past the 161.8% extension. And then, even from this low, if, Draftkings hit a new high, it'd be 1, 2, 3, 4, 5. An even more aggressive count could open up. But even in the shorter term, I think that this is a little bit of, evidence for what could be at play with, I've made this connection with Disney and the airlines and even the cruise lines where we've seen Royal Caribbean break to an all-time high, but more specifically with the gambling sector. That would all be a lot of evidence, and I think it still is a good amount of evidence that looking at Caesars and Penn, and some of these counts that seem goofy might not be in the gambling sector. Bets kind of text a BETZ, has this whole sector kind of as the gambling ETF, but 1, 2, 3, 4, 5 waves for Penn, an ABC correction, and then a wave 1 and a wave 2. The bad thing here is that the invalidation isn't very useful. I think from this high, let's see, we're still not at the 100% extension. Let's see, would it even work here? Yeah, we're not at the 100% extension. But I think I've seen that the institutions are using lots of straddles and strangles on Penn. It's very risky, but the upside reward is tremendous. And Penn's volatility suggests that it's, probably about 2.5, 3 times more volatile than the S&P. At least it's implied volatility. What was the beta? The beta for Penn is 2.19. That's 219% more volatile than the S&P, but also pretty correlated with the S&P. If the S&P goes up 3%, Penn is expected to be more volatile. That's just what beta is saying. Correlation analysis, I think a more useful method is through the ETF holdings. That's why I'm including this with Draftkings, and also I think the ETF holdings and I think macro access can show like the historical correlation between any two tickers for a certain period. This is a large wave 1 and a wave 2. I think this is another wave 1 and another wave 2. We're past the 78.6% fib. We're at a 52-week low. There's no stop really that's useful right now. But Penn, I am looking for, in the big picture, a wave 1 and a wave 2, another wave 1 and another wave 2 with Draftkings, with a lot of the gambling sector. I think it could get explosive. Caesar has a more useful invalidation right now, at least from a long-term perspective. I think this is a large wave 1 and a wave 2. This is 1, 2, 3, 4, 5 waves up. Looking at the RSI, 1, 2, 3, 4, wave 5 ends with momentum divergence. Beautiful ABC correction right where the length of wave A placed the wave B high is met for wave C. A small wave 1 and wave 2 is formed. So above 40.08, a wave 3 can be entered.